This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, August 4, 2026, and this is the After Hours session. Now, let's get into it. Bitcoin is sitting at $64,209, holding steady while the Fear and Greed Index plunges to 14, the definition of extreme fear. We have a market where price is flat, but sentiment is screaming panic. Let's look at the data. Looking ahead to the next 48 hours, the economic calendar keeps things grounded. On Tuesday, August 4th, we have durable goods orders, JOLTS job openings, and the trade balance release. These are the traditional macro backdrops. But right now, the real story isn't in Washington, it's in the crypto order books. And tonight, the biggest event on that front is the PayPay IPO filing, a $1.1 billion Nasdaq listing bid from the entity that owns 40% of Binance Japan. That's the headline that matters for our assets today. Here is the snapshot. Global market cap is up 0.66% to $2.27 trillion. Bitcoin is at $64,299, plus 0.70%. Ethereum is lagging at $1,873, up 0.30%. But look at the movers. Avalanche is up 2% at $6.71. Polkadot is the standout, up 4% at 87 cents. Meanwhile, Uniswap is down 1.60%, and Stellar is down 1.30%. We are seeing a clear split. Infrastructure is winning, speculative governance tokens are bleeding. First, let's tackle the headline that is shaking the region. Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Pulse, this is a massive volume anomaly. How is this feeding into the extreme fear score?
It is the primary driver of the 14 reading. Retail investors see war and 700% spike, and their instinct is to sell. But here is the disconnect. The total market cap didn't crash, it went up. The $17.26 trillion floor held. What we are seeing is not capitulation. We are seeing geographic displacement. Capital isn't leaving crypto. It is moving from Iran to somewhere else. The fear index is reacting to the headline noise, not the price action. If the price had dropped 10%, I would agree with the fear. Since the price is green, this 14 score is a lag indicator of anxiety, not a reflection of current value destruction.
So the fear is emotional, not fundamental? CIPHER, let's look at the flows. 700% spike in Iranian outflows, that is hundreds of millions, possibly billions, in sudden liquidity injection. Where did that money go?
It went into spot. Look at the volume. $53.37 billion in 24-hour volume. In a futures-heavy market, you'd see the order book widen and spread explode with that kind of sudden liquidity event. Here, the spot depth absorbed it. This aligns with the broader trend. Bitcoin futures demand is at 2024 lows. Institutions have stepped away from leverage, so you have a vacuum on the derivatives side. And you have geopolitical money flooding the spot side. That is why Bitcoin is holding 64,000. It's not being bought by hedge funds right now. It's being absorbed by spot buyers who aren't looking at the headlines, they're looking at the entry price.
Grid, you've got Bitcoin at 64,209. With futures demand at 2024 lows, what does the chart tell us about the structural integrity of that level?
Structurally, it is fragile. 64,000 is psychological, yes, but without leveraged longs supporting it, there is no cushion. If spot buying dries up even for an hour, we drift down. The key is that we haven't drifted. The fact that we are still above 64,000 with zero derivative fuel tells me the sellers are exhausted. But watch the volume. If that 53 billion figure drops significantly in the next few hours, the support becomes theoretical. We need to see sustained spot inflows to keep this anchor tight.
Let's pivot to the strongest performer in the major caps. Avalanche at $6.71, up 2%. While the market panics, Avalanche is climbing. Grid, what is happening technically here?
Avalanche is decoupling. It is trading at $6.71, well above its immediate support zones, while Bitcoin is grinding sideways. This is a classic relative strength breakout. In a risk-off environment, capital rotates into assets with active development and clear utility narratives. Avalanche is doing that. Technically, it is holding higher lows while the broader market is forming lower highs. It's not just riding the wave. It is generating its own momentum.
And that momentum is being funded by the same quality rotation I'm seeing in the chain data. Look at the laggards. Uni is down 1.60%. XLM is down 1.30%. Governance tokens and legacy payment rails are getting sold. Money is flowing out of speculative decentralized finance and into infrastructure. Avalanche is the beneficiary of that flow. It's not random. It's a systematic rebalancing by smart money that agrees with pulse. We are in a fear cycle, so bet on the safest horses.
I want to caution against calling this smart money. Look at the other side of the ledger. Core Scientific turned lower after disappointing Q4 results. That is a major mining proxy. If the operational side of crypto is struggling to report earnings, does Avalanche really represent quality? Or is it just the best-looking ship in a leaking fleet? I see the price action, but I see the fundamental stress in the mining sector. A 2% gain in Avalanche is nice, but it might be masking broader operational weaknesses in the ecosystem.
That's a fair risk flag. Let's look at the other standout. Polkadot at 87 cents, up 4%. DOT is having a very strong day. CIPHER, is this the same rotation?
Absolutely. DOT is up 4% at 87 cents, and it mirrors the Avalanche move. Both are Layer 1 infrastructure plays. The flow data shows that as traders flee the unstable governance tokens like Uni, they are clustering around networks with proven consensus mechanisms. This isn't hype. It's a flight to safety within the altcoin space. The 40% gain in DOT's intraday volume confirms this is institutional or serious trader activity, not retail fear of missing out.
But remember, the crowd is still at 14 on the fear gauge. If retail hasn't joined this rally, these gains are brittle. Once the initial burst of flight to safety ends, if Bitcoin doesn't break higher, alts like DOT and Avalanche usually give back those gains fastest. They are outperforming because the alternative is worse, not because they are necessarily stronger fundamentally.
Let's address the elephant in the room. Bitcoin's dominance is holding at 56.56%. Usually, when alts outperform like this, Bitcoin dominance drops. Here, it's steady. Grid, does this signal an alt season start or something else?
It signals a consolidation, not a breakout. If this were a true alt season, we'd see Ethereum leading and Bitcoin dominance dropping aggressively. Instead, Ethereum is barely moving at $1,873. We have Avalanche and DOT moving, but the rest of the market is quiet. This is a picking pockets market. Traders are taking profits from weak hands in alts and parking them in Bitcoin. The dominance holding at 56.56% suggests Bitcoin is the destination, not the launch pad.
Finally, let's look at the regulatory and exchange landscape. PayPay, 40% owner of Binance Japan, is seeking a $1.1 billion Nasdaq IPO. CoinDesk reports this clearly. SPECTER, what is the risk here for BNB and the broader exchange token complex?
The risk is valuation and regulatory scrutiny. A $1.1 billion listing forces transparency that private entities often avoid. If PayPay's financials reveal dependency on crypto volatility or regulatory fines, it could spook the market. Currently, BNB is up 0.5% at $593.34. It's holding, but quietly. This IPO is a double-edged sword. It brings legitimacy, but it also brings public market scrutiny. If they stumble, BNB gets dragged down with it. I'm watching for any negative press surrounding that filing date.
From a flow perspective, the IPO announcement has created a slight hesitation. We see some profit-taking in exchange tokens generally, but BNB's 0.5% gain shows the buyers are still stepping in. It seems the market believes the IPO is a net positive for long-term viability, despite the short-term noise.
Apex, you've heard the splits. We have a market in extreme fear, 14, but with positive price action. We have geopolitical chaos driving spot inflows. We have a divergence where infrastructure, Avalanche, DOT, is strong, but governance, Uni, is weak. And we have a looming IPO that could shift exchange sentiment. How do you synthesize this?
This is a structural bifurcation. The data shows that the old paradigm, institutions leveraging Bitcoin to pump the whole market, is gone. Futures demand is at 2024 lows. The institutions are gone. What we have left is spot-driven, structural rotation. Pulse correctly identified that the fear is emotional, disconnected from the price. CIPHER confirmed that capital is rotating from speculative governance into infrastructure. Grid noted that Bitcoin is holding 64,000 not because of leverage, but because of spot absorption. My synthesis is simple. The market is cleaning house. The noise assets, like the laggard XLM and Uniswap, are being dumped. The signal assets, Avalanche and Dart, are attracting the limited available liquidity. The opportunity is not in trying to catch the falling knife of the broader market, but in identifying which infrastructure projects are successfully capturing the safe haven demand from a panicked retail base.
So the takeaway is, ignore the headlines, look at the flows. Infrastructure is winning, speculation is losing.
Precisely, the data supports a buy-the-quality approach amidst the fear. The 14 fear gauge is a backdrop, not a barrier.
Thank you to Pulse, Grid, CIPHER, SPECTER, and AVAX for the analysis. Key takeaways. Bitcoin is holding $64,209 on spot strength despite collapsed futures demand. Avalanche and Polkadot are leading the rotation into infrastructure, while governance tokens fade. And the PayPay IPO adds a layer of regulatory watch for exchange tokens like BNB. Tomorrow, watch for follow-through on the PayPay filing and any stabilization in the Iranian outflow data. This has been ShadowQuant Crypto Edition. Remember, this is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.